Hey there, YouTube. It's Casey here, TaxSaleAcademy.com. Hey, thank you so much for joining me on this episode of the Tax Sale Podcast. If you enjoy podcasts, check us out, TaxSalePodcast.com. You're also more than welcome to sit here and watch me on YouTube. Let me know that you enjoy watching me as I record these podcast episodes. You can do that by clicking that thumbs up button. Also, please don't forget to subscribe to our channel by clicking the red subscribe button. That way you don't miss out on future tax sale training videos. Let's go ahead and record that audio podcast right now. Welcome to the Tax Sale Podcast, where tax sale investing is made easy. My name is Casey Dim, and I'm a tax sale veteran. I'm the leading tax sale expert. I am the author of the Tax Sale Playbook, founder of the Tax Sale Academy, and I am your host right here on the Tax Sale Podcast. This podcast is provided completely free through and because of the Tax Sale Academy, which can be found at TaxSaleAcademy.com. Again, that's TaxSaleAcademy.com. All right, on today's podcast episode, I want to discuss an alternate funding method. I'm frequently asked questions related to funding tax sale transactions. And when I look at a lot of my data points for the videos that I put out, I always notice that the episodes related to funding tax sale purchases are very, very popular. The fact remains, you must have money to invest. You're investing money into tax defaulted real estate, of course. What many people don't realize, but something that I write about in Tax Sale Playbook, is that when I started in this business, I had saved some cash up. And then I added some more cash to it from my partners to acquire my first tax sale properties. Now, these partners didn't even really know that they were my partners at all. And I was okay with that. They also charged quite a bit to use their money, but I was okay with that too. Their names, Visa, and MasterCard. That's right, 2 Visas and 1 MasterCard contributed to my first tax sale purchases. So as you start out, if you have a lack of capital, it is extremely important to be creative. The money is there. The money is out there in the marketplace waiting for you to find it. It's waiting to be invested. It's waiting to be used to make more money. And if you don't have any or much money at all starting out, it's up to you to find exactly where that money is waiting for you at. And even if you've been investing for years and years, it's a lot better to make money using OPM or other people's money than your own. That's the reason that many of the extremely successful investors still utilize financing when they don't need to. So how can we best utilize credit cards for tax sale investing? How can we buy properties utilizing those credit cards? Well, there's 2 primary ways. We'll discuss them first, then we'll get into some of the details. The first way is to simply swipe your credit card. There are many auctions where you'll just pass them your credit card and they'll swipe it. In some scenarios, you hand it to them. It's very simple, just like going to the grocery store. In others, you might provide that information online to them. It's a different scenario, but it's the same result. Paying with your credit card. It's exactly like going to the grocery store. This will be the preferred method most of the time if you're going to utilize a credit card simply because it's so easy, right? Now, most auction companies are going to charge you a surcharge to swipe your credit card, okay? They're going to label it as a surcharge, a convenience fee, processing fee, or whatever other random name they have come up with. But it's a surcharge for using that credit card. And the reason is they must pay somebody to process that credit card transaction. They are charged by somebody called a merchant processor. So you can get the amount of their surcharge from the company directly, but typically it's going to be around 3% or so. And again, that's going to be added on to your bid amount. You are responsible for that. So a $1,000 winning bid becomes $1,030. Not a big deal, but be sure to factor it in. After the purchase, it's simply like any other credit card charge, and you'll see it on your monthly statement. The second way to utilize credit cards are through cash advances on a card. If you have available credit, but your auction does not accept credit cards at all, then you can consider getting a cash advance if your credit card offers it to you. This is simply a way to provide you money by utilizing your available credit on that credit card. And it could be deposited directly into your bank account. They could mail you a check or a number of other different ways. The difficulty with this method is there's often a usage fee attached to the initial amount, plus you might get charged a higher than normal interest rate. For example, if you need $1,000, you get that $1,000 advance, but they'll charge you, say, a 5% advance fee. So right out of the gate, you owe $1,050. Then, instead of your normal interest rate of 14.99% or whatever it is, they might have an advance fee, an interest rate fee for the advancements of, say, 10% higher. Maybe it's 24.99% or whatever it is. Obviously, these are just examples, so be sure to check with your card issuer for details, but certainly the fees on these cash advances are going to be higher than just swiping that credit card initially at the auction. But if that's the only way to get started, and if it makes sense, of course, financially, then go for it. Now that we've discussed how to use those credit cards, let's discuss a few extremely important aspects of using them for your tax sale purchases, followed by a few tips on using them. First off, you must be extremely aware and confident of what you're doing before you use that credit card. The absolute worst thing you can do when it comes to using a credit card is make a bad investment. Then what happens is you're stuck owing Visa the amount that you owe them, plus all the interest on top of it, and you're going to lose money. So make sure you're very, very aware of your numbers and how accurate they are. Another thing is to be certain of your holding times. Credit card interest rates are much, much higher than most other types of money that you can borrow. And because of this, these interest rates can eat your entire investment very, very quickly. If you're looking to make, say, 15 or 20%, and it's going to take you a year to do that, odds are you're probably going to lose money. So keep that in mind. Make sure your numbers are as exact as possible. Make sure your holding timeline is going to be estimated to be as close as to what it will be realistically, okay? And something to mention here is if you don't feel that you can be responsible with those credit cards, good for you for having that self-awareness. And my suggestion is if you're borderline, maybe I should, maybe I shouldn't, or maybe you have other credit card issues or you've had them in the past or whatever it is, then just skip over this specific strategy and find some other ways to fund your initial tax sale purchases. There's definitely lots and lots of ways out there. So don't worry about this episode if that is you where you cannot be responsible. And even still, if you do think you have that responsibility, my suggestion is to use those cards and then sell the properties as quickly as you can and pay off those cards the moment that money hits your account. The goal, of course, is to build up your capital. That way you can acquire bigger and bigger properties without the use of cards in the future. And perhaps eventually you could transition to some other borrowed funds like signature loans or HELOCs if you are looking to use OPM. So let's discuss a few tips on using them now. Look for some sort of special offer. So you have decent credit. You probably get offers all the time in the mail. And I'm not talking about opening a bunch of brand new accounts or anything like that. But what I'm talking about is mainly balance transfer type offers. In some situations, you can actually transfer balances from one card to the next without any fees or with very, very minimal fees at all, while taking advantage of special interest rates like 0% interest for 12 months or 24 months. I've seen as far as 36 months out if you'll transfer balances from one place to the next. This will allow you to use one card for the transaction, then transfer it to another card, and then carry the balance on that card interest-free until you sell that property. Another tip is to find cards that offer cashback rewards. Now, there are debates, websites, blogs, YouTube channels, all sorts of other stuff that can help you compare all the different reward systems, but I personally am just a fan of the basic cashback type reward. What you can do is you can get a card that has a 2% cashback, for example. Use that card for your purchase, and even if you're charged a surcharge of sorts, it becomes minimal. That 2% surcharge disappears, or that 3% surcharge from the auction company gets reduced down to just 1% simply by choosing which card you pay with. Then you can combine that with a balance transfer offer at 0% and you're golden, right? You essentially have free money to use for that in investment. And then one last little tip here is that it might be helpful for some people to have one credit card they use solely for deposits. So when you get to the point of bidding at multiple auctions, you could be expected to place a deposit at each one of those auctions utilizing a credit card. So if you are going to 5 auctions and they all require a $1,000 deposit, you suddenly have $5,000 just sitting there that you cannot access now in available credit. Now, usually it's just a hold, so you're not charged interest or anything like that, but that hold can last 30 days. I've seen it last as long as 60 days before. So consider having a card dedicated just for your deposits. So there it is. That's how you invest in tax-sheltered real estate using credit cards, as long as some tips that I've learned over the years. It can be an extremely helpful way to get started if you do it correctly. And of course, if you have that required self-control. So hopefully you've enjoyed this podcast episode and you found it helpful in your quest for tax sale success. If you did, please take just a second out of your day to leave us some positive feedback on whatever podcasting platform you are listening to us on right now. And if you are looking to learn more about investing in tax-defaulted real estate, there are a whole bunch of links in today's show notes that will take you to all the resources that we have put together for you. One of those links will take you to TaxSaleAcademy.com, where you can get a free copy of my book, Tax Sale Playbook. If you cover the nominal shipping costs, you can also join the Academy for the most advanced step-by-step training that we offer, including one program that includes every single one of our training programs combined, and that's our Platinum Startup Package. And again, that's TaxSaleAcademy.com. Hey, take care and make it a successful day. See you next time.